Sam Bankman-Fried's massive crypto enterprise has suffered a spectacular downward spiral in the crypto sector. Withdrawals at FTX, Bankman-Fried's crypto exchange, have been halted, and an attempted rescue from competitor Binance looks to have failed. This might endanger depositor money and would undoubtedly be a big setback for not only Bankman-Fried, but the cryptocurrency sector as a whole. Let's find out more about how the crash came about and what other parties have been caught up in it. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. Events leading up to the crash. These drawbacks are common in crypto, which is prone to dramatic boom-bust cycles. However, FTX and Bankman-Fried are notable for the prominence they attained prior to self-immolating. Despite the fact that it is not subject to U.S. regulation, FTX had gained widespread respect during the last 3 years. Bankman-Fried had gained global clout as a result of his views on cryptocurrency regulation and financial support for U.S. election candidates, not necessarily in that order. Given subsequent evidence that not everything was as it seemed at the exchange or at Bankman-Fried's other business, Alameda Research, these narratives about both FTX and Bankman-Fried are now plainly dead in the water. On November 2nd, journalist Ian Allison released data suggesting, based on then current prices, about $5.8 billion of Alameda Research's balance sheet assets were connected to FTX's exchange token, FTT. Because of the intimate link between Alameda and FTX, this discovery was explosive. Both were formed by Bankman-Fried, and there had been much concern regarding the scope and nature of their fraternal relationships. FTX generated the FTT token out of thin air, raising concerns regarding the real-world open market value of FTT tokens kept in reserve by affiliated entities. Worries over Alameda's balance sheet appear to have translated into a quickly escalating mass exodus from FTX, owing to their recognized strong relationships. The market witnessed $6 billion in withdrawals in the 72 hours before everything came to a head on November 8th. According to statistics, this temporarily left FTX with a balance of, believe it or not, one single Bitcoin. This rush to the exits apparently prompted Bankman-Fried and his team to start urgently looking for an acquisition partner, seeking a range of possible partners prior to Binance's entry into the picture. Binance agreed to acquire rival cryptocurrency exchange FTX, ending days of speculation that FTX and corporate sibling Alameda Research were facing a financial crisis. The agreement, which was publicized in tweets like so much else amid nearly a week of upheaval, would bring together two crypto trading powerhouses. FTX was valued at $32 billion earlier this year, and Binance is the largest crypto exchange by volume. The transaction's financial details were not disclosed, although FTX's U.S. branch, a distinct corporation known as FTX US, was not included. Binance CEO Changpeng CZ Zhao also confirmed the partnership on Twitter, stating that the two exchanges signed a non-binding letter of intent. Both Bankman-Fried and Zhao stated that a comprehensive due diligence procedure would begin within the next several days. Binance later announced that it had canceled its letter of intent to purchase FTX. As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com, the spokesperson said. In the beginning, our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help. Every time a major player in an industry fails, retail customers will suffer. We have seen over the last several years that the crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse user funds will be weeded out by the free market. Solana also hit hard. The Solana price dropped by more than 40% due to volatility in the cryptocurrency markets. The most prominent recent occurrence in the crypto markets was, of course, the bank run on FTX, which was sparked by rumors that the exchange and its connected trading business Alameda Research were insolvent. While the FTX Alameda Research problem had an overall influence on the cryptocurrency market, certain crypto assets have been hit far harder than others. This includes, of course, FTX's FTT token, but other currencies like Solana, in which FTX and Alameda Research have large stakes. Because FTX and Alameda Research are both in desperate need of liquidity, it is realistic to expect them to liquidate their crypto assets, such as Solana. This eroded the market's faith in Solana, resulting in a significant sell-off. Aside from FTX and Alameda Research being compelled to sell Solana, the incident also raised questions about how FTX being bought by Binance might influence the Solana ecosystem on a basic level, which has harmed Solana's price. While Solana's future may still be bright, FTX's apparent demise may be a setback for its ecosystem. FTX is a major backer of both Solana and the different projects built on the platform. Binance, on the other hand, is likely to put an emphasis on the BNB chain ecosystem. Celebrities also caught up in the disaster. Tom Brady and Gisele Bündchen, who have already had a turbulent fall, are among the expected losers in the shocking crash of the FTX crypto market. FTX had a liquidity crisis, and the value of FTT, a crypto token produced by the exchange, plunged. As a result of the domino effect, Sam Bankman-Fried's FTX was clamoring for a bailout from Binance, which appeared to be the cause of the FTT fall in the first place. The rescue is allegedly in jeopardy because Binance evidently didn't like what it saw in FTX's books. Brady and Bündchen were revealed as having purchased ownership holdings in FTX in 2021. Brady was a brand ambassador for the cryptocurrency exchange, and he starred in advertisements for it. Bündchen had been appointed as the company's consultant for environmental and social activities. She said at the moment that this particular opportunity showed us the importance of educating people about the power of crypto while simultaneously giving back to our communities and planet. We have the chance to create something really special here, and I can't wait to see what we're able to do together. Whether or not FTX gets bailed out by Binance, Brady and Bündchen have most certainly lost a large portion, if not all, of the value of their ownership share in the company. It is the latest dramatic occurrence for the former power couple this season, who formalized their divorce in late October. Unless another bidder emerges, Binance's pullout from the deal certainly seals the fate of FTX, and with it, faith in the crypto sector among both institutional and retail investors. However, it may not be a total exodus for institutional investors, as they already have a large presence in the sector. Whatever the conclusion, Kevin Marsh, co-founder of cryptocurrency prime brokerage business Floating Point Group, believes institutional investors will continue to pour money into the market. Anyone who is now active in it is here to stay. Despite the context, they're still having talks with institutions that are keen and trying to find out how to get into the sector. Other entities affected. Some peers and major traders still have assets stuck on the exchange. Genesis, a trading firm for investment firms, tweeted on November 9th that it had hedged and sold collateral, resulting in a total loss of $7 million among all counterparties, including Alameda. Genesis emphasized that it had no substantial exposure to FTX's native FTT coin and no loan relationship with the company. The exchanges have a trading relationship among other exchanges, but the exposure had no effect on their capacity to service their clients. Genesis said on Twitter that its derivatives company now has around $175 million in locked-in funds in its FTX trading account, which had no influence on its market-making activities. The trading firm also stated that its operational capital and net FTX holdings are not significant to its business, and that recent FTX occurrences have not hampered the full operation of its trading franchise. Wintermute. Once the initial solvency worries were raised, the market maker, which helps offer liquidity to crypto exchanges, lowered its position to FTX. Wintermute stated that it still has cash on FTX and that, although not ideal, the sum is within their risk tolerance level and has no substantial influence on their overall financial situation. Multicoin Capital. According to a letter from the business, about 10% of the entire funds under control of Multicoin Capital's master fund are stalled as pending withdrawals on FTX. Before the withdrawal freeze went into place, Multicoin was able to transfer around 24% of its FTX-held assets. Bitcoin, Ether, and USD altcoins are among the frozen assets. That's a wrap for this video. Check the videos on the screen if you're interested. Let us know in the comments below if you think FTX's crash is a precursor to the fate of cryptocurrency. If you enjoyed this video, give this a big thumbs up, and do not forget to subscribe to our channel if you want to see more videos like these. See you next time.